This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi everyone, this is Mathis Connor with Connor Management Group, and this week we're going to look at the best dividend stock to buy right now. Today is Tuesday, February 3rd, 2015, and here on the opening slide we see that this stock is in the air services industry, and we see its 6-month upside potential at 39.7%. On to the next slide. And we see that the name of this company is called Bristow Group Incorporated, ticker symbol BRS. This company is in the air services industry, and its 6-month upside potential is at 39.7%. And for some of you who've been listening to this podcast for a few months, Bristow should sound familiar to you because we covered Bristow back in November as one of the best growth stocks to buy right now. And it returns on our list again, this time as the best dividend stock to buy right now. So some of you heard this story before, but for others, we will go through it once again, and we will point out as to why it's a great dividend stock as well. On to the quick facts slides. We have 2 descriptions for Bristow. Here's one from Value Line. Bristow Group Incorporated charters helicopters to transport personnel from onshore bases to offshore drilling rigs, platforms, and other installations. Through its subsidiaries, affiliates, and joint ventures, the company has major transportation operations in the U.S., Gulf of Mexico, Nigeria, and the North Sea, and in most of the other major offshore oil and gas producing regions of the world. The other business description we have is Bristow Group Incorporated provides helicopter services to the offshore energy industry in Europe, West Africa, North America, Australia, and internationally. Its helicopters are used principally to transport personnel between onshore bases and offshore production platforms, drilling rigs, and other installations, as well as to transport time-sensitive equipment to these offshore locations. The company also offers helicopter flight training services to commercial pilots and flight instructors, as well as military training services through its Bristow Academy. In addition, it provides helicopter repair and production support services and search and rescue services to oil and gas company. The company provides its helicopter services to integrated national and independent oil and gas companies. As of March 31st, 2014, it operated a fleet of 494 aircraft. The company was formerly known as Offshore Logistics Incorporated and changed its name to Bristow Group Incorporated in February 2006. So basically, this is a helicopter transport company, and the principle of the bulk of its business is serving the oil and gas industry. The website for Bristow Group is www.bristowgroup, that's BRISTOW group.com. The company's headquartered in Houston, Texas. They were founded in 1955, and they have 4,486 employees. Onto the products and services slide. What we have here is a picture of the Bristow logo and a description of their 4 classes of helicopters. They have the large capacity helicopters, which carry 16 to 25 passengers, the medium capacity helicopters, which carries 12 to 15 passengers, the small capacity helicopters, which covers 4 to 7 passengers, and their training capacity helicopters, which carries 2 to 6 people. Some excerpts we have from some recent investor presentations are also on here. We have one excerpt of interest. Declines in recent oil prices have not impacted our production and infrastructure-oriented business model. Largest share of revenues, greater than 60%, relates to oil and gas production, providing stability and growth opportunities. That's, of course, somewhat debatable right now. Additionally, we have some other graphical segments. Their typical revenues by segment. Production is 60% of their revenues. Exploration is 20%. And development is 10%. Others listed as other. And that's important because production is 60%, goes to show you that most of their revenue is from existing operating facilities, not from new developments. Additionally, their revenues, about 60% of their revenues are under fixed contracts, and the remainder is on the variable. So Bristow receives a lot of just fixed capacity payments. They receive payments just to be available to provide services as well. And additionally, on this slide, there's a graph showing how their business is spread all around the world. I mean, a lot of their business is in South America, it's in Africa, it's in Asia, and they have business in Europe and Russia as well, in addition to North America. On to the metrics slide. The annual revenue for Bristow over the last 12 months was $1.7 billion. Their net income over the last 12 months was $119 million, and their cash from operations was $201 million. The operating margins for Bristow in 2013 were 17%, and for 2014 they're tracking to be 20%. Onto the valuation metrics. The trailing PE ratio for Bristow right now is at 15.8, and the forward PE ratio is at 10.4. That's a significant decline from 15.8 to 10.4 on a percentage basis, and basically it implies that analysts expect their earnings to increase substantially over the next 12 months. The PEG ratio is at 0.8. Anything less than 1 is usually a good sign of an undervalued company. The price to sales ratio is at 1.2, definitely not expensive at all, as well as the price to book ratio is at 1.1. That's also a low figure, often indicating value. The enterprise value to EBITDA ratio is at 8.6. And, additionally, the dividend yield for Bristow is at 2.3%. That's very respectable, especially when you combine it with the upside we see. And the average dividend payout ratio over the last 3 years has been 22%. So this upside combined with a respectable dividend yield of 2.3% is why we believe that Bristow is, among other reasons that we'll get to, is one of the best dividend stocks to buy right now. Onto the price chart. What we see here is that over the last 12 months, Bristow is down 19%. The stock had been pretty level around the $75 level for the first 6 months of the past year, say up until the end of July of 2014, and the company has basically pulled back a bit right now to the $57, $58 level, and a lot of that pullback is due to the decline in oil prices. We just believe that Bristow is, because a lot of its revenues and earnings are oil and gas based, they have unfairly received a lot of sell-off, but that sell-off is also creating this opportunity. So we feel pretty good about Bristow, and we believe the sell-off is just related to an overreaction in the oil and gas markets. On to the next slide. This is a slide we call the why now, the bull rationale, and basically we found it convenient to attribute our bull views into one of 5 categories. Usually when there's an appreciation opportunity, an upside opportunity, it's rarely one thing. It's usually the culmination of several things. So we thought we would just highlight them for you. Now, the 5 things that we point out typically is that there's usually an upside opportunity because of 1, increasing sales and revenues, 2, a decrease in expenses, 3, decreasing capital expenditures, low valuation metrics, or change in the capital structure. Usually the driving reasons for additional stock to go up in the near term is one of those 5 reasons. In Bristow's case, we believe that the drivers are for 2 of these 5. Number 1, we see, and analysts tend to believe, that Bristow is going to continue to experience increasing sales and revenues, while American companies and domestic oil and gas production is under pressure right now because of the price of oil. Bristow has an international footprint, and they continue to see demand for increasingly their large-scale aircraft, which is also a higher margin business, and increases in their search and rescue operations and training and the winning of government contracts internationally. So that, combined with the fact that a lot of their revenue is under fixed capacity type payments, Bristow is not expected to suffer too much. Now, Bristow has stated in the past that they would expect to see some pullback, noticeable pullback in their revenues once oil starts to dip below $50 for a prolonged period of time. Right now, oil is around $49, and we've been watching Bristow closely for the past few months, and analyst estimates have not pulled back much, which continues to give us confidence in Bristow's outlook. Now, they will be releasing earnings any day now, most likely tomorrow, so we will see if there are any surprises. But analyst estimates are anything close to what are projected. We still see Bristow as having substantial upside opportunity. So part of the bull rationale is we see Bristow experiencing increases in sales and revenues. The second driver is that we see Bristow as having a low valuation metrics in the near future. Right now, it's arguable that Bristow is fairly priced, but with these substantial increases in earnings from historical levels, that the accounting and the details imply that they will have pretty low valuation metrics in the near term, which will create pressure for the stock to be purchased and for price increases. So those are 2 reasons for our bull rationale, the why to buy it now. Basically, increasing sales and revenues and low valuation metrics in the near future. So on to the summary slide. The financial statement quality for Bristow we see is very good. They have their debt under control. The operating margin trend, as we mentioned, is increasing, and part of that is related to the increased demand for the larger aircraft, which is a higher margin business. The price pattern trend has been decreasing. We attribute that primarily to the pullback in oil, but on a cash flow basis and earnings basis, looking forward, they appear to be solid on good footing. Our overall market outlook is mildly bearish. We're seeing a few more bearish names as of late than bullish. So while Bristow may face some headwinds just because of the low price of oil, we still don't think that will stop it from appreciating in the near term. The recent closing price for Bristow was $57.60. Our 6-month price target for Bristow is $77.17. So that gives Bristow a 6-month upside potential of 39.7%. And so it's for all these reasons that we believe that Bristow Group is the best dividend stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Bye. Hi, this is Matthew Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why the stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also in mechanical engineering, and I have an MBA in finance from the University of Chicago. So hey, that takes care of my educational background. Basically, bottom line is to see, yeah, I did a lot of schooling. What my career experience has been to date. I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA, and basically I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where we, where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager. And basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things will be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, say, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Connor Management Group and the development of all these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week.
They're pretty comprehensive and pretty thorough. The algorithms use fundamental technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Content Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to CONNORMG.com. That's www.connormg.com, or you could go to our website and you can see a presentation that compares Content Management Group side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trade's, a minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size was probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast of our thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers 2 newsletters, both weekly, 2 weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to CMG stockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.